CNBC-TV18 and CNBC Awaaz present the REIT Connect in partnership with IRA.
Hello and welcome to the REIT Connect, our special podcast series where we deep dive into the dynamic world of real estate investment trusts or REITs and their potential to become an important asset class in your diversified portfolio. I'm Ritu Bhandari. Now, in simple terms, REITs let you invest in large commercial properties like offices or malls without actually buying these directly. They pool money from thousands of people to own and manage these properties, sharing the rental income or profits with all investors. So, in fact, it's just like owning small pieces of many buildings and earning from them without the hassles of being a landlord. On the podcast today, we are going to talk about why REITs are a matured investment class around the world, what's their potential for growth in an emerging market like India, and the benefits that they can offer to retail investors like you and me. So let me welcome the experts, Rachit Kothari, Senior Vice President, Investments and Real Estate at Brookfield Asset Management, and Sundareswaran S, Managing Director at Morgan Stanley. Welcome, gentlemen. Thank you so much for joining us here today. All right, so coming to you first, Sundar. Now, India has traditionally been known as the back office to the world. And of course, now things have changed a lot. Over the last couple of years, the India growth story has taken the world by storm. And now we are being looked at as the office to the world. So what do you think are the key growth drivers for this big shift? And secondly, what role has the real estate sector of India played in this?
Absolutely. Pleasure to be here with you. I think it would be unfair to say that we are still called the back office of the world. I think we have long gone past that. I mean, if you look at what we are really doing today, I would argue we are probably doing some of the most cutting edge work for most global corporations across sectors. I mean, historically, yes, it was dominated by the IT services sector, but today, if you look at it, all the global capability centers which are coming up, and the nature of work even the IT services companies are doing are really arguably cutting edge. And this is now panning across sectors. Today, most companies across pharmaceuticals, banking, financial services, industrials, aerospace, pharma, healthcare, all of them have maybe R&D, high-end technology work, testing work, design work getting done in India. So that's really leading to a meaningful change in terms of, one, the quality of work, nature of work, the employment. The people here have been a big differentiator. Yes, I mean, maybe you started with some of the more regular work, but we have really moved up the value chain. As companies have delivered, the confidence for these companies to employ and set up larger offices in India has really picked up. And today, for a lot of companies, India is probably the largest or the second largest workforce across the world. Now, real estate has been an absolutely integral part of all of this, because what people want today is a work environment which is conducive. People spend probably close to 50+% of the time in office space, right? So, I mean, it is what is there in the workspace outside of the desk which you work in, what is the environment, the ecosystem, etc. Now, all of those have undergone a pretty massive sea change over the last decade. And it's no surprise that I think we would continue to move up the value chain. More and more companies are going to come up, set up operations, and we will continue to do more high-end, cutting-edge work in India.
All right. And Rachit, you want to add to that? How do you perceive the real estate sector in India at the moment? What sort of a growth momentum do you see in the next couple of years?
Yeah, I'll give a slightly different spin to this, and adding on to what Sundar said, right? Basically, the answer to this lies in the fact that India has a fantastic macro and a very steadily improving micro. And what I mean by that, Mridhu, is basically, India is very uniquely positioned in the global context in the sense that it is one of the very few economies in the world which has double-digit nominal GDP growth. And at the same time, a room for interest rates to decline. And what that does for real estate is create a huge amount of demand because in a growing economy, you need to house all the growth in real estate eventually. In context of India, we're talking about $3 trillion of GDP growing to $5 trillion. That's a lot of growth. And all that growth has to be housed in some form of real estate, whether it's housing, offices, malls, etc., etc. Uh, what also underpins this entire growth story is strong micro trends, right? We are seeing a rise in urbanization. We are seeing steady consumption growth. We are also seeing institutionalization of real estate, right? And what's happening is more and more cities are getting set up. Cities are expanding as well. There are people flocking into these cities, which means you need housing to house these people. You need offices where these people could work from. Because consumption per capita is also growing, you need more manufacturing to produce the goods, more warehousing to house the goods, store the goods, and more places where people could shop, and more hotels where they could have the discretionary spending. So when an economy is doing well, is the entire spectrum of real estate that gets activated and energized, and that is what excites me the most for the real estate landscape in this country.
All right. So you listed a bunch of sectors there where you see tremendous growth potential. How is Brookfield positioning itself to leverage this growth in the next couple of years?
So, interesting question, and I would just say that we are one of the largest investors globally in commercial real estate, right? And in India, we're present in two asset classes, offices and hotels. But there's several other asset classes in India which have equal amount of growth potential where we are present globally. If I could go one by one on each of the sectors that are there today, right? If let's say pick office, let's start with office, right? At the heart of the office asset class today in India is India's services economy, right? Sundar touched upon it, right? There's a dual advantage that India has today of, on one hand, having high talent availability, on the other hand, significant cost arbitrage relative to global peers, right? And despite a 3-year period of headwinds, right, all the negativity that was out there, it has emerged, I would say, very resilient. So that is exciting on one side. On the other side, it's the manufacturing economy of the country that's showing the green shoots because of all the governmental push, right? And industrial, heavy and light, right, is one asset class that we believe is exactly in the same place as office was in 2010s, which means you are seeing a multi-decadal growth opportunity in that space as well. I spoke about urbanization and consumption. That will continue to drive retail, hotel, and some of these other strategies. But housing is one clear example where there's a white canvas that's available in front of us. Housing for rent, or multifamily as it's called in the global context, is an asset class that's not present in India, or at least is not organized in India. We see a big opportunity to set some of these things up. And that's what I think that's where our optimism is coming from.
Right. Okay. So, Sundar, to add to that, what are some of the main advantages that you see for investors to be putting in money on REITs in India? And, what makes them ideal at this point in time in the India growth story to really contribute to the portfolio diversification, especially of the Indian retail investor?
Yeah, there are a number of things. I mean, if I were to sort of go through it one by one, right? I mean, I think if you look at it, it took some time for the regulations for the REITs to come in place. But that was time, I would say, well spent. The regulations we have today for the REIT product arguably are best in class compared with anything globally. And that's a consistent feedback we have heard from investors. So the key here is, if you are looking at REIT as an investment opportunity, it's a well-regulated product with very little things which could go wrong. Yes, I mean, it's an equity product, but there's a very solid set of regulatory framework which governs how a REIT has to run. Right. Now, the benefits of a REIT itself are, in my view, it's a de-risked, diversified, liquid, inflation-protected return instrument. What I mean by that is, when I say de-risked, you have an ability to invest in a diversified portfolio and de-risk it. You're not taking exposure to a single asset. So you have a portfolio protection which is there. Inflation-adjusted growth. Very few asset classes in India actually offer you growth which is inflation-protected. Here, you have an ability to get that inflation-protected because the rents are growing in line with inflation or better. And at the same time, de-risk because there is a capital value which is unlikely to go down, but at the same time likely to appreciate in value over time. And you have a liquid opportunity. An investment opportunity is very liquid. Your ability to get in and get out is very easy. unlike a physical ownership of REITs. So when I think about it, I mean, it offers you all the good characteristics of direct real estate ownership, but in a much more secure, regulated, and liquid manner. And to add it all up, I mean, it's much more tax effective for the investors. So that's what makes it more attractive.
Right. Okay, Rachit, adding on to what Sundar just said, that the regulatory framework is perhaps the best in the world. We are on a high growth path when it comes to the nation as a whole. From a regulatory perspective, what else can be done in the next couple of years? Because REITs are still at a very nascent stage in India, only been about 5 years, very low penetration and adoption rate at this point in time. So from a regulatory point of view, what's your wish list?
Yeah, so I agree with Sundar, in the fact that we had a very strong start and a very solid framework to begin with, and compliments to the regulator for having spent the time and effort to have actually borrowed some of the best practices from some of the more developed REIT regimes. Right. The first 5 years, we have had a very solid start because you had good sponsors, you had great governance standards, great transparency, great regulatory framework. I think the next 5 years have to be about strengthening the product and giving it that adequate liquidity support that it needs, right? And what I mean by that is getting reforms done in a manner which support the liquidity and value discovery of this product, right? I'll give you an example. In 2021, right before 2021, for that matter, actually, if you wanted to invest in REITs, you had to have at least 50,000 rupees as a minimum lot size. Right, in 2021, SEBI actually took that away, and it became possible for a retail investor today to go out and buy one unit if that's all he wanted to buy. Right, that has brought in more investor participation, improved the liquidity.
And if we were to look at mature markets and, REIT being one of the most mature asset classes around the world, give us a sense then, Sundar, of what are some of the best practices that we can pick up from other parts of the world, aside from the regulations, of course, which we spoke about.
No, I mean, this is a very mature product globally. I mean, the total REIT market capitalization, if you think about it on a global basis, is north of $1 trillion. So we are still at the very beginning. I mean, the total market cap for REITs in India is less than $10 billion. So this product, in my view, will continue to grow. There's a big opportunity. How could it continue to evolve over a period of time? I think you will see diversification of asset classes. You started with 3 office REITs, now you have a retail REIT. You will likely see more asset classes getting added into this product. You will likely see more acquisitions. So far, most of the acquisitions have been sponsor-led acquisitions, which is assets where the sponsors have contributed assets for growth of the REIT. I think over a period of time, you will see increasing number of third-party acquisitions also come in, which just enhances the scale, flexibility of the REIT. So I think that's what's going to happen, and it's a matter of time before I think the product becomes much bigger than what it is today.
Right. So you spoke about diversification. Where else do you see the diversification coming in? We've got commercial spaces, offices, malls as of now. What's next, perhaps? Hospitality, industrial real estate, and how soon do you see that happening? And do you think that's going to be a big push for retail investors to start investing in this product?
Yeah, so you have office and retail. There is industrial is probably the next sector where you could probably see REITs from a new asset class perspective. I mean, it could get classified as a REIT or an infrastructure trust, which is an InvIT, but I'm using that interchangeably. You'll likely see some assets on the industrial warehousing side, which comes out. Over a period of time, yes, other asset classes will come. I mean, Rachit spoke about multifamily, etc. I think it's over a period of time you will see that. Again, I think it's consistent with what has happened in other markets globally. I mean, if you look at Singapore, it was no different. You started with office and retail as the first 2 asset classes. Over a period of time, they have added other asset classes. Data centers have now been an integral part of some of the REITs, etc. So we think over a period of time, some of this will happen. It really depends on the nature and scale of these portfolios. I mean, today you have north of 500 million square feet of commercial portfolio in the country. So naturally, that had to be the largest market for a REIT perspective. Right. Some of the other asset classes are still growing. As they get to a certain size and scale, I think it would get added.
Right, absolutely. Rachit, let's talk a little bit about commercial real estate. And has the office demand really reached the pre-COVID levels yet? If not, then how do you see the REITs performing? And, how is Brookfield's portfolio in India really capitalizing on this?
Yeah. So again, interesting that we're speaking about this, but I would say that demand is nearly there compared to the pre-COVID levels. Every quarter incrementally is better than the last, so it's all directionally positive. One big change that happened in December 23 was government introducing amendments to the SEZ regulations, right, which allowed SEZ, which were export-oriented assets, to lease spaces to domestic operators as well. Right, people who wanted to do domestic operations from their site, right? That phenomena is yet to fully play out in the leasing numbers. So I'm hoping that the numbers will only look better from here, and we are directionally headed in the right way. Right, but what's also important to understand is the backdrop in which this leasing recovery is happening. The period between March of 2020 to mid 2023, there were several headwinds that office as a sector globally faced. Right, there were global recessionary pressures. There were multiple COVID lockdowns. The return to office was very slow. In the case of India, as I said, SEZ regulations were unclarified, which was impacting leasing. People are in fact surrendering space. Right, so all of this happening at the same time and almost in quick succession of each other.
Correct.
Right, that was really the Agni Pariksha of Indian office sector. Right, and very glad to say that the end of it, I think it has emerged with flying colors at the end, and it's proven to be really resilient.
Despite hybrid work coming in.
Despite hybrid work coming in, because what we are seeing on the ground is very different today, right? I can tell you on behalf of all REITs here, and all of our portfolios are experiencing demand where global corporates are setting up global capability centers, new ones. Existing corporates are expanding and taking more space, right? And their tenants relocating from non-institutional quality buildings to grade A buildings, right? And all three phenomena are playing out. If I could give you one example from Brookfield's India real estate portfolio, which is there in the REIT, right? TCS renewed 1 million square feet with us in the middle of COVID. Well, there was so much chatter around people never coming back to work again, right? Very similar examples of Samsung and MasterCard taking 500,000 square feet each. So, these examples only give us a lot more confidence that we are on the right path as far as the leasing recovery is concerned, right? And the second part of your question was, what is Brookfield doing to capitalize on this? So we are doing a few things. We are, of course, making use of the regulatory flexibility of converting these special economic zone spaces. We have done about 1 million square feet, applied for it. Some of it is done, some of it is underway, right? We are buying assets and developing selectively in locations where the grade A quality assets could be developed or leased. To give you an example, our REIT did a large deal with the Bharti Group, buying the 50% stake in some properties in the Northern Capital Region. Very recently, it's announced, right? And thirdly, we're investing back into our own properties, right? Trying to keep them up to date. Tenants have become demanding, and to respond to that, of course, we have to keep our properties modern. So we are doing some of these things, to keep it relevant.
Right. So how does your experience in global markets really influence your strategies with respect to commercial REITs in India?
Okay, it's very similar, actually. It's very similar and consistent, right? Brookfield globally has an ownership philosophy of buying high quality real estate in excellent locations, right? And, then better them from there using the operating capability and global reach, that we have. Right, so if you see a portfolio in India, and even if you see portfolios of other REITs, right, the assets that sit there, the large ones for sure, have been built and developed and leased over a period of anywhere between 10 to 15 years. Right? These are truly difficult to replicate. You can't put a replacement value on that patience of having created those assets, right? And it's a similar quality assets that we plan to have in our REIT going forward as well. Right. The other thing that we do globally, and we have learned globally, is that REITs are not supposed to be static vehicles, right? REITs are supposed to be living and breathing dynamic capital pools, which means there has to be a lot of M&A activity. You have to buy, you have to sell, you have to rebalance your portfolios, you have to raise money, you have to establish capital partnerships, etc. Right? We are doing a lot of that in India, and I would like to believe we are leading that transformation. Right? Sundar spoke about acquisitions previously. Our REIT has done about $3 billion of acquisitions. In India, it's been heavily acquisitive, And if there's one thing that we could give to the Indian REIT market today, is that DNA of, keeping the action in the REIT space to make it more exciting.
Right, absolutely. Well, Sundar, while we've been talking about the India growth story, a lot of the growth story is also coming from towns beyond, the metro cities. So when you look at commercial office real estate investment trusts, what's your sense of where the next big investments are going to come from? What geographies are we looking at? What regions are we looking at?
See, I think my sense is, at least for the near term, most of the demand is likely going to be concentrated in the established markets where there's office demand. It's a function of where you get the talent. Now that continues to be concentrated in call it the top 6-7 cities of India. That will continue to absorb, in my view, the largest amount of absorption. Yes, there will be some smaller cities which will have some office locations, office parks, etc. But if I were to sort of think about it on a numerical basis, my sense is more than 90% of the demand is likely going to come from the top 6-7 cities. And it's just a function of where talent is available, technology is there, easy for people to move around.
Right. Okay, so I want to shift gears a little bit, and as we close this conversation, I want to come to an important question that REITs are being pitched as a very stable asset class that offers a very steady income and potential for a lot of growth. Now, how do you really convince the retail investor who has perhaps burnt his or her hands when it comes to real estate investing that this is different? And what makes this better and safer than owning physical real estate?
I think the key is, let's look at the asset class. When you say people have burnt their fingers, it could be in different asset classes. And let's just use the case of office or a commercial real estate as an example. If you look at commercial real estate which is leased out, typically these are leased out to best-in-class tenants, Fortune 500 clients, with a really long-term lease in place, 9-year lease in place, with an inbuilt escalation clause. The chances that you could go wrong on some of this is very remote. In fact, what has happened is over a period of time, when these leases are coming up for expiry, you have seen the same tenants renew it at a much higher price, or the new clients come in and take it at a much higher price. So, in my view, when I think about REITs as a product, I almost view it as a downside protected investment, which gives me yield and an ability to drive growth here. The only way you could lose value from this product is if you suddenly see an increased vacancy or you suddenly see the market rents going down. Now, if you look at the history over the last 10-15 years, neither of those have really panned out. As the occupancies dipped a bit, and arguably these have been the toughest 4-year period we have all seen in our lifetimes, right? Yeah. COVID, work from home, hybrid work, etc. But the REITs have been remarkably resilient even during this period. While the occupancies have come down, most of them have sort of shown releasing at much higher rentals, tenants coming back and taking up new space, etc. So it's been remarkable. Some part of the growth has lagged a bit because the occupancies did come down. But as things normalize, I think it will sort of come back. And that's where I think the confidence for this product will start coming back in a big way. Yes, these are not products which will give you immediate pop on listing. But if you're thinking about a de-risked, stable, mid-teens return instrument, right, I think this is arguably one of the best products which is available there.
Okay, one of the best products available there, Rachit. Then by when can we expect more penetration of this product in the Indian market? Just about 2 lakh REIT unit holders at this point in time. What's your sense of the timeline that it's going to take for the penetration to increase?
A lot of crystal ball gazing there, to be honest with you. But look, I'll just say one thing, right? Any new financial product or investment product, it has to go through its own adoption cycle. We early on saw it with mutual funds as well. Of course, there was a lot of effort and education that went into it to get it to where it is today. As far as REITs are concerned, I would like to believe we are probably midway through that journey. First 5 years have helped us set a good foundation. Next 5 years will probably help us make that 2 lakh into 2 crores. But I think one very important thing that needs to happen, and Sundar did touch upon it as well, is the appreciation for the fact that it's a very strong total return product, right? And it's not just a replacement of fixed income, right? There's a 7% yield in this product. There's a 5% more or less contracted growth, 2% of some more growth that you can have through organic upsides, a couple of percentage points more if you do acquisitions and development. So looking at a 15 to 16% return product, right? What needs to happen is that investors have to begin appreciating this entire return story. And given the headwinds that we saw in the last 3 to 4 years, somewhat that has not happened, right? And because that has not happened, I think there are sophisticated investors who are today convinced, but there's a lot more investors who are still not fully convinced to come on the cap table and start buying into this story. So I think once that changes, hopefully we will see this 2 lakh go to 2 crores, but I think it's a journey from this point onwards.
All right. Absolutely. Indeed, a journey. Final word to you, Sundar, on one big trend that you would watch out for when it comes to the REIT market in India over the next decade or so.
I think it's going to be, if I were to think about it and draw down parallels from what happened elsewhere in the globe, this can become a really big contributor to the real estate market capitalization contribution. Right now, REITs are a very small part. I think it's going to become bigger. You're going to see much more diversification and more players coming to the market. And I would believe the appreciation of this product is going to go up over time.
Thank you, Sundar. Thank you, Rachit, for joining us here today and sharing those very valuable insights with us. Well, clearly, it's still early days for real estate investment trusts in India, but a lot of promise and a lot of exciting times ahead for the adoption of this asset class in our emerging economy. Thank you so much for joining us here today. With that, it's a wrap of the REIT Connect. Thanks for tuning in. Goodbye.
CNBC-TV18 and CNBC Awaaz present the REIT Connect in partnership with IRA.